A while ago, we published this video on one of the 3 must-have insurances in Germany, the disability income insurance. And the feedback we've gotten from some of you guys was,
"But Axel, I have an office job.
So?
I'm not gonna become disabled. I can program even when I'm sitting in a wheelchair and have only one arm."
Okay. It's not just a question if you can, it's also a question if you want to. But what do you mean by that?
I will invest the money in ETFs instead of wasting it for a disability income insurance.
Really? That's an interesting thought. So you are comparing a disability income insurance with an investment in ETFs. Let's see if that's a fair comparison in this week's video.
Perfinex, Personal Finance for Expats.
What's up everyone? Welcome to a new investing versus insurance video from Perfinex. Today with a question that we've gotten quite often in consultation. Well, it's actually not a question, it's a comparison. Some of you have the idea to rather invest the money in ETFs, shares, bitcoins, whatever, instead of wasting it for the premium for your disability income insurance. But is that a good idea? Let's give you my 2 cents on this ETF versus disability income insurance comparison, as well as the most stupid idea I have ever heard in all my years of being a financial planner at the end of this video. First of all, an honest congrats from my side. You were watching our disability income insurance video, you reached out to us, which you can also do here. You kind of see the need to secure your ability to work with a disability income insurance. You are not naive thinking that you're invincible.
I'm invincible! You're a loony.
Congrats! But you still hate paying for insurances, right? I get it. Especially for the ones you consider unnecessary. I do too! But I still have a disability income insurance that is deducting every single month from my bank account. Here's a screenshot of it to prove it. And I hate it, don't get me wrong. And as soon as I have enough assets, I cancel my disability income insurance. No need to pay for unnecessary insurances. Like I don't have life insurance because there's nobody depending on me. But like many of you out there, I'm depending on my health and my ability to work in order to pay for my life. So I have to have this insurance. Some health issues are just considerably worse than a flesh wound.
Just a flesh wound.
For me personally, a disability income insurance is not just a protection of my health. Like probably every one of you out there, I think I'll never become disabled anyway. But I don't know. So I have to have my disability income insurance to pay me money and protecting my assets that I worked so hard for. And that's also why I combined my disability income insurance with the base pension level 1 to make my whole premium tax deductible. That will get you a disability income insurance as cheap as possible. If you wonder if that's right for you as well, check out this video on pensions level 1. This will explain everything. Link is in the description. But enough talking and memes. Let's see some numbers. The average German salary in 2019 was almost 4k gross per month, which is a little over 2.5k net. If you're not a member of the church and don't pay church tax, of course. That is one of 5 tips to increase your net income with the same gross salary, by the way. Wonder what the other 4 tips are? Check out this video or join our live stream right here on YouTube. Days can be found on the channel. And if you wonder in general what happened between your 4k gross and your 2.5k net, here's a video explaining you the German payslip in detail. Alright, so 2,500 euro is kind of what the average employee is earning here in Germany net. And let's say, just to have the numbers as easy as possible, you are 27-year-old right now, meaning you have 40 years of work to go. Earning 2,500 per month times 12 times 40 years equals 1.2 million euro net. That's the value of your human capital, your ability to work. Congrats! You're a millionaire! And that's the very low end. First of all, because salary usually increases over time of your career, at least with inflation. And second of all, most of you expats out there earn a lot more than average because you are way more qualified than average. But I don't want to make any pretty numbers or fake calculations here. I want this to be very straightforward. So we just take the average of 1.2 million euro net income over a 40-year career. And a 27-year-old that wants a disability income insurance that will pay 2k per month net on his bank account in case he's disabled, let's not even go for his 2.5k income, would cost around 75 euros per month on the cheap end. Same calculation, 75 euros per month times 12 times 40 years equals 36,000 euro in premium for your disability income insurance. That's a lot of money, not quite 1.2 million, but still a lot of money. And that's actually one way to look at this. You pay 36,000 in order to insure 1.2 million. And that's just 3% of the potential payout that you have to pay in premium. And these two words that start with a P, potential payout, are actually what's bothering you, right? You think if nothing happens to you and you don't become disabled,
I'm invincible!
These 36,000 euro are thrown out of the window. And it's true, they are. So you'd rather invest your money than giving it an insurance. I understand, but that's pretty dangerous and wrong thinking. Let me prove it to you. So here's what you would pay over the years for your disability income insurance. Because you watched our Investing in Germany series right here on YouTube, you are an absolute investing genius and managed to get the historical 7% average annual return that the stock market has returned over the last 200 to 250 years. So many averages today. That's why the money that you invest grows to this. Oh boy, huh? So a disability income insurance is actually not costing you 36,000 euros. It's actually costing you 186,000 because you have the opportunity cost that your money is not growing at a 7% rate of return. Now the argument is always that you will pay kind of your own disability pension from your investments. Alright, let's see how long one becomes disabled on average. It's 6 years. Of course, one disability lasts shorter and another one lasts until retirement, but today's average day. So the question is, when are your investments sufficient enough to pay your own disability pension for 6 years straight? But wait, there's something wrong in this table. Do you know what it is? Taxes. You have to pay 25% capital gains tax on your investments. So net, your investments are worth this much. Meaning you can pay yourself a net disability pension of 2,000 euro this many months. And since the average disability lasts 72 months, you can never pay yourself your own disability pension until you're actually 67 years old, which is the age you retire anyway. And until you accumulated so much money that you can pay your own disability pension, you need this insurance, if you like it or not. The numbers just don't add up, guys. It only works under one circumstance, if you know exactly that you will never ever be disabled. But nobody knows if, when and how long you can become disabled. And these three factors destroy your thought that investing in ETFs can replace a disability income insurance.
But Axel, I've been healthy so far.
Past performance is no guarantee for future results.
But Axel, I have an office job.
Alright, that might prevent accidents, which accounts for only 9% of all disabilities in Germany. Does an office job protect you against cancer, which is 18%? Or your motion apparatus, which is 19%? Good luck trying to sit at a desk for 8 hours a day when your back or your knees are ruined. Or against your psyche, which is 29%? Don't think so. And this little virus that is currently going around the world is not the first one, and it will probably not be the last one either. And nobody's safe against that. On average, every fourth person will become disabled for about 6 years during their working life. That's the numbers, and they don't lie. You can close your eyes and ignore the facts, but that's not gonna change reality. Comparing investing in ETFs with a disability income insurance is like comparing apples with oranges. They serve different purposes, and both financial products have a right to exist. Investing in ETFs is creating wealth for yourself, and the disability income insurance is protecting your ability to work. They do not replace each other. It's a completely different discussion. Like the question if buying or renting real estate is better. That's also an apples versus oranges comparison. That has become, by the way, one of our most watched videos by now, which makes me very happy. Because I love to debunk these myths for you that are simply not true. Look, you're an adult, so spend your money in whatever way you see fit. I'm just here telling you what's good and what's maybe not so good, so you can spend your money properly. Just don't be stupid and bet your whole existence thinking that you're invincible.
I'm invincible!
Like one person I met in consultation that told me the single most stupid thing I have ever heard since becoming a financial planner. I also told him that straight to his face, so it's not like I'm snitching behind his back now, just in case you're wondering. He recognized that disability is a risk. So far so good. So he wanted, together with 4 friends, open a shared bank account, which everyone is contributing €100 a month to, because statistically, one of them would become disabled at least once in their life. Okay, you basically created your own mini insurance, where a lot of people pool money to pay for the damages of the minority, because we know not every risk will turn out to be true. But again, the numbers don't add up. If 5 times €100 get paid in the account, which doesn't even return any interest rate because it's a bank account, you have €500 per month. 400 in case one gets disabled because he would stop contributing. How does anyone want to live on €400 per month? First, that's less than Social Security. And second, I want to see if that friendship holds up going forward if one of them gets disabled and his friends have to pay him €100 per month for the rest of his life. Anyway, what do you think about this idea to replace a disability income insurance with investments in ETFs, stocks, Bitcoin, whatever? Write us a comment. I'm excited to see your opinion. And if you want to discuss your personal financial situation and what's best for you, feel free to text us on WhatsApp or secure a free 30-minute meeting with us by scanning this QR code. Stay healthy, everyone.